What's good, everybody? It is day 6. It's your boy. Today was a successful day. Today was Tuesday. Today we had some news. We had two 10 a.m. folders. One was orange, one was red. And like I've been telling you guys, I'm still bullish. I'm still wanting to see them take price above this high here. We had Monday's low in place here yesterday, and I had wanted to see them take this out this morning, so I'm going to put this as a sell side liquidity. And we also had Thursday's high in the marketplace as just a regular buy side liquidity target right after the low was taken. So these are my two liquidity areas that price could have targeted. So if we were bullish first, we would have targeted Thursday's high first. If we were bearish, we're going to target the Monday low. I think I said that right. I'm sorry. I'm a little tired right now. But anyways, we took out the sell side liquidity. We took out Monday's low. Now we went above here Thursday. This is what actually happened. And then we have this high up here, which we haven't reached into yet. But hopefully by Asia or tomorrow, we should reach into that high and see what price has to offer above that high. As I was telling you guys last week, I'm still interested in them taking it into this fair value gap here, this SIBI, sell side imbalance, buy side inefficiency. So there's no need to think that we're going to stop here at this high. But now, can we reverse from this high here and possibly rebalance things that need to be rebalanced? Absolutely. Yes, we can. But we do have this fair value gap here, or the SIBI, and we could definitely reach into that. So that's that. That was a daily time frame right there for you guys. Here is the 4-hour. Again, nothing special about this low. This low is Monday's low. So on a daily perspective, yes, you're going to draw all these lows out here because yes, they are lows, but they're not yesterday's low. And so when you look at the daily candles with looking at them from the high and low and you jot them out, you'll see how much more receptive price is to take those areas out in front of your screen, because you just trying to draw up these little levels. Yes, it's liquidity, but what's more important, the hourly liquidity or the daily liquidity? And if you have ever been in ICT's mentorship, he says there are the higher time frames that have parent authority over those smaller time frames which have child like authority. They are minor to the parent. Okay. And so that is Monday sell side liquidity. We take it out today. So that's why I took the short in the beginning in the morning. And then we also had this buy side liquidity. And I also bought it. Not all the way up here, but I wanted to see them take price higher. I just didn't have the balls to continue to hold price. As you guys can see, something I want to note out. This 10 a.m. candle has a large wick, but we still remain above. And we stay inside this 1 hour fair value gap. We stay inside of it. We stay above this. We stay above this one as well. And the wick comes and snaps right back into this range. This was your high probability candle to go long. And this candle was just filled with shorts. So if we go down to the 5-minute now, since we know exactly what we was looking for, we have the overnight session range here. Then at 10 a.m., we have this big candle here. If you draw out 10 a.m. opening price, you'll see what I mean. Their ability to take price lower. Let me put this as Monday's low. That way you guys don't get confused, because I gotta do it for you guys. Monday, let me just say Monday low. So this was Monday's low, keep in mind. So that's, if you were trying to long before this low was taken, you were in a very, very dangerous place. And longing before that liquidity was taken was kind of dangerous, not just because it was a daily's low, but also keep in mind, before we have these crazy runs higher, we need the opposing side taken first. If I'm looking for buy side liquidity that to be reached, above me, below me, doesn't matter. I need the opposing side to be taken. That way they can pair it and actually have the liquidity to drive price higher. Okay, they need someone to pair those orders with. This is 10 a.m.'s opening price. This is the news release. We're going screaming lower. We break below this low. We close below this low. We still have this sell side liquidity down here. I'm looking to short. This right here is a large fair value gap on the 5-minute. Part of this fair value gap is supposed to remain open, so then it becomes a breakaway gap with the idea that this whole fair value gap shall not be filled immediately. Instead, they should find either resistance at the consequent encouragement or show us the willingness to not even want to go to consequent encouragement and just take price lower, which is exactly what they did. And then we're targeting sell side liquidity. And then after sell side liquidity is taken, we are targeting buy side liquidity. So those are the reasons for my short today, guys, and my longs. Going back into this whole idea here, this is the fair value gap. We on the 1 minute saw this, and we know that this should remain open. Can we trade into this? Absolutely. We almost did on the 1 hour. I mean, on the 5. Here in the 1 minute. In the 5 minute, we already traded into, but the 5 minute holds more weight than this 1 minute fair value gap. But this 1 minute fair value gap still could help you be more precise if in the event that price wanted to continue to go higher and actually retrace into the SIBI. But it didn't. And it leaves. We have this short-term sell-side liquidity here. And then we have this fair value gap as well. I took my shorts here on this candle's, once this order block was taken here, I took my shorts right in this candle right here. We have an order block here, and then they retrace into the internal sell side liquidity, buy side liquidity, and then we're reaching for these lower prices. I got stopped, and this is where I have to get better with. So I had my my short like this, and I had my TP here. There was a moment in price where I entered here and price had respected the consequent encouragement and left. I put my stop loss right above the wick, and then within the candle not closing, it goes again and sparks up to 50%, and then it comes back down again. And within this next candle, the opening of this next candle, I got in, and then I caught the short here to this low, and I just took my profit. Although we wanted to see it here, I'm not in the business of being correct. NASDAQ was showing unwillingness to be one-sided. So when we got to this price action, I was very quick to pay myself, especially since it's Tuesday. It's not my most favorite day. So I got stopped out once, and then I took the short again, and that one was what it was, and that was the trade idea for this here. I also took a short here at the top here. I also got stopped here because I was trading the 5 minute as a breakaway gap, and I didn't give it enough room because any much more room above this was going to call for too much of a wide stop loss for me. So the best thing that I could have done was just wait for a change in the state delivery on the smaller time frame, or even on the 5 minute. My best option there could have been just waiting a little more. And I traded this wick once we traded above this high right here that created the fair value gap, and I put my stop fairly closely to the 25% quadrant of this fair value gap because I didn't want to see them go in there, but they did. They punched in, and it was just me being stubborn and wanting to be part of the move without having a wide stop loss, and that's okay. So then we made up for that loss here, and then here we took a long, and this long was high probability. This long was the epitome of perfection. Another A+ day, to be honest. If I can really As far as my performance goes, I would consider myself a B plus. Don't want to be too hard on myself, but I'm gonna give myself a B plus or A minus, give or take. Um, just because I still made a couple of errors here. I got a little impulsive here, and I also got impulsive here by aggressively trailing my stop versus just giving the room that it needed on top of the order block and then letting it just flow. That's what I should have done, but I didn't. And then here, I saw the opportunity to go long here because number one, we have sell side liquidity taken once, 2 times, and 3 times. And that is a 3 Indian pattern run. We also had sell side liquidity here being taken. And then there's a breakaway gap here forming, expected in an area where buy side and sell side delivery is offered. Now we have this bullish candle leaving an imbalance behind. And this imbalance should stay open. Why? Because this area of price, this price range in price between this candle's low to this candle's high is already efficiently traded. For them to come back down inside of this breakaway gap is them not leaving a breakaway gap open, and also it's them not taking price higher. Because the thing is, high probability order flow looks like this. It looks like moments where we take out sell side, we leave breakaway gaps open, then we form a measuring gap on top of the breakaway gap, and then there's a fair value gap at when the market structure shift occurs. Whenever you see this element in price where we're trading through a range and there is a gap being left open, that is exactly what you want to see, because they're just passing price through the range. They don't need to rebalance something that is not inefficient. Period. So we have this market structure shift here. The market structure shift occurs right here. And then right at the market structure shift, they also leave a fair value gap. They don't even come down to 50% of this fair value gap, which is beautiful. This right here is beautiful to us. And then this is showing their willingness to not want to even take it to consequent encouragement. That shows the strength. It's not just because we're respecting consequent encouragement and that we're not coming down to consequent encouragement, that we're staying above it. It's not just that. It's the idea that we took out sell side liquidity. We took out Monday's low. We took out the daily liquidity level. We are trading back above a range. We're leaving breakaway gaps open. We're leaving these gaps open. Now we've created a fair value gap exactly at the market structure shift high. For them, it's a way to pair their orders there. And it can be used as a continuation move. Then you look at all the areas above price where buy side liquidity was left. Excuse me, guys. There's a SIBI here. There's this buy side liquidity here, equal highs. We have 10 a.m. Ever since 10 a.m. opening price, we've repelled away from 10 a.m. And all there was from 10 a.m. opening price all lower, there was only sell side liquidity. Sell side delivery delivered. It's all sell side liquidity. All of this is sell side delivery, so therefore it's all sell side liquidity that is being printed. But we also leave buy side liquidity behind. Buy side liquidity needs to happen because buy side delivery is needed in here. Sell side imbalance, buy side inefficiency. We need buy side. We need the buy side. We need the bullish delivery here. Okay, we need longs to occur because all of this is inefficient. Then we reach into here and we complete this delivery with this candle right there. Us closing at 10 a.m. above with a bullish candle is us repricing for market efficiency. It's everything that you want to see. Everything that you want to see. Then we take out, going back to overnight session logic, we took out sell side liquidity of overnight session. We left buy side liquidity on the way to the overnight session high. And guess what happens? Buy side delivery left, then buy side liquidity we must meet. Buy side liquidity is up here. Boom. We also have Thursday's high right there. and they take it all the way above. One thing I wish I would have done better with this trade is not my entry precisely, because I did very well. My stop loss was here. I traded it once we pierced into it, and my stop loss was here of 10 points. And then I paid myself out here with this candle right there, that specific doji right there. I caught my 40 points, which is great. But me understanding that we are in quarterly expiration gives me the opportunity to but to have the patience to hold it for a lot more, because I knew it was going to go up to these buy side liquidity. Although I am not complaining, I am very grateful. Thank you, Lord, that I was able to profit today, as most people probably weren't or probably were. It doesn't matter. I'm not here to exalt myself, but I'm here to say that I could have held this and been better, and trust with what I knew that it was probably going to be up there. And if it was such an issue for me to pay myself up here, that I would just place my stop loss aggressively. I would trail my stop loss aggressively. If I have to improve, is the ability to trail my stop loss aggressively. That is one of my improvements that I have to improve on. And you guys are saying, oh, why didn't you just take partials? Well, I'm only trading one micro. One micro on this $1,000 live account is all I need. One micro. And that's what's generating the consistency in my equity curve. It's just climbing up slowly. It is not trying to be the best trader in the world. It's not trying to gain $50 million in one trade. I'm not trying to be a millionaire by tomorrow. I'm not trying to be rich. I am trying to sustain myself with consistent habits that would lead to longevity in my career as a trader. And I hope that's what we are all doing. That's all that matters here. That's all that matters here. Trading incorrectly is almost as bad as us trying to sin. And I'm not saying that trading is spiritual, but what I am saying is that we're not supposed to be doing the things that we're not supposed to be doing. If we know that we are not supposed to be doing something, then why are we doing it? Right? So me trying to trade with a 2, 3, 4, 5 minis when I don't have the leverage to do it, it speaks a lot about my immaturity as a trader to accept the fact that I am not supposed to be doing whatever it is. So I challenge you guys to pay attention to those little habits that are holding you guys back. We have to stop setting excuses for ourselves as to why we are not profitable. We know what we're supposed to do. We know that we're not supposed to be over trading. We know that we're not supposed to be over leveraging. We know that we're supposed to manage risk correctly. How do you manage risk correctly? Well, that's up to you. How do you personally feel about risk? What is too much for you to lose? And when you can answer that question and you know yourself and you know what you can't lose and what you're willing to lose, then you would be able to be more concrete in your understanding of your rules, because you would base your rules off of your personality and not rules off of your backtesting magical mythical session. I'm sorry that I have to convict you guys of that, but we've been caught so many times trying to find the magical trading strategy in our backtesting session, and that's not how it works. It's the habits that we build continuously from today moving forward. If you did something bad, improve on it. Note it down, journal it. That's what journaling is for. Recognize it, become aware of it, and then through awareness you are able to implement change. But if there is a lack of awareness, number one, because you're just not journaling, or number two, because you are avoiding awareness, that's something that also exists. Us avoiding awareness. Why would we want to avoid awareness? Why would we want to avoid the truth? Because it's too painful to face on. And if we know that we're doing the wrong things and we're not trying to face these things head on, it speaks of our lack of maturity within ourselves to recognize where we go wrong. It speaks about your stubbornness in your own personal life, because trading is just a reflection of your characteristic flaws, and all the flaws that you have that don't coincide with what you're trying to portray to yourself or what bias you have, they all show as a flaw in your charts. You not being able to let go of a trade idea because you're so caught up on being right, because no one can ever prove you wrong. In your personal family, you're probably an attorney, a lawyer that everybody has to find themselves in a debate with just for a simple thing. And you're not able to take constructive criticism because of that trait. Figure those things out. I'm speaking to myself as well as I say these things. It's just a reminder for me because I already know these things also. But I want to bless you guys. I hope you guys have a great or had a great Tuesday and that you guys have a great rest of your week. Hopefully I didn't bore you with my rant, but the rant is needed. It is needed for all of us. We need to hear these things because what we're trying to accomplish here is not small. The type of discipline that requires for us to get to where we want to go is not small. We are people that have a vision and we're running towards that vision. We're not idolizing it. We're not putting it on a pedestal, but we're running towards it in the sense that we are progressing in a form to get there. We're putting the inputs to get the output of what we want. We have to be responsible. We have to hold ourselves accountable. For today, I did a great day. Lately, I am very proud of myself how I have been very patient looking for quality setups. But look, today I almost slipped up. I took a short here. Right when this was a large fair value gap, instead of waiting for something to have a tighter stop loss, right? Me over here aggressively trailing my stop loss and price hasn't even moved in my favor yet. Why would I be doing that? And it was my inability to accept that these large ranges are going to be there whether I like it or not. And that I don't want to take a big loss because naturally if we have a large range day, then by nature my stop loss is going to be larger because the increments of price are a lot larger. So a candle that always looks like 10 points could be a 30-point candle in today's day because it was a large range day. So we have to accept that. Probability was there after this low was taken, and we know that because the breakaway gaps were left open and then there was a fair value gap at market structure shift. Let me tell you something. When there is a lack of fair value gaps and imbalances, it means that order flow is low probability. So there is no need for you to be blowing your account if there's no fair value gaps left, imbalances left open. All right. So I'm going to end it there, and I'm going to be back tomorrow. I hope you guys have a blessed rest of your week, and we will see you guys tomorrow back in the morning gratitude entry and the message that I will have for you guys tomorrow morning. God bless you all. God is great. God loves you, and God is good all the time. We are saved by His grace, and we, because of His grace, have been given the access to this information for someone like ICT to open up his heart to talk to us about things that he should have kept for himself or could have kept for himself, for him to make a promise with God and allow us to have access to this information. Let me tell you something. This is all because of God. You're good and you're bad. So I praise God today for having a great day in my trading and just a great week, honestly. I've been very, very, very disciplined, very consistent in the way that I'm approaching price, and I am not trying to go in there and rush. So this was 24 minutes of scolding, and I hope you guys got some insight, and I know that we will have and finish this week very strong. We will have a great week, and that this week will finish off very strong. I love you guys. I'm wishing you guys the best. See you.